Welcome to Founders Unplugged, hosted by Greg McCallum. Long-form, honest conversations with founders and entrepreneurs from around the world.
Hey, Greg. So my name is Joseph Zipfel. So I'm the Chief Investment Officer at SFC Capital. I have been with SFC now for, over 10 years now, leading the investment team. We're the most active investors in startups in the UK. So we do about 100 investments per year now at our current rate. So that's a lot. And that's split roughly 70% of new deals, so pre-seed investments, so first investments in companies, and about 30% of follow-ons. So those companies that are raising new rounds, doing very well, we like to follow on. So in a nutshell, that's what we do. We have been around for more than a decade now. So we have followed the growth of the UK startup ecosystem, and we have grown with it in many ways. Started as a small syndicate of investors in 2012, built around our founder, Stephen Page, and personal network. So he's himself an exited software entrepreneur, started getting involved with angel investing in the 2010s, and sort of structured that as SFC in 2012. I joined him a couple of years later when he launched the first fund. So initially it was very much a syndicate, classic type of business angel group investing in startups. Did some really good deals. So they were the first investors in a company called Onfido, which last year was one of the first UK AI exits, pure AI exits. So it was a company that developed de-verification, so automated identity verification. If you've ever used, you've ever registered with a bank and you had to show your passport to the camera, that's probably using Onfido's technology. So they were the first investors in that back in 2013. And obviously that's done very well. It was a 500 million plus exit last year. And that's sort of, how we built the kind of, the fund, the track record on. It helps when you have an investment like that straight off the bat. And yeah, we've built slowly, first the fund, and then now, what's effectively the most active pre-seed and actually seed fund in the UK, and one of the most active in Europe. So whenever you see those kind of league tables, we often in the top 10 globally, actually, top 5 Europe, and usually the number one in the UK in just the activity rate. So we're quite high volume investors. And we invest really in everything. When I say everything, it goes from, deep tech. So I've mentioned Onfido as kind of, your AI kind of deep tech company that was very successful. But we've also got investment all the way into consumer products, things you can touch and feel and buy from your supermarket of choice. So we've got, we invested in companies like Hunter and Gather, which is a range of high quality of food and drink products. We've also invested in a company called Fussy, which is a sustainable, suitable deodorant brand that's doing very well. And we also do on the side, we do life science, medtech companies. So it's all, everything really. Our portfolio is kind of a reflection of what founders work on in the UK. Our job is very much to be in the right places and connect with all the good universities, all the good accelerators, and make sure the good founders come to us for raising their first round. It's really that simple in many ways. And over time you learn how to select the teams to have the best potential. So in a nutshell, that's what we do. I personally lead the investment team. So I kind of split my time between fundraising and investments. We do so many investments, and I kind of focus on that these days. So that's quite fun. There's never any downtime when you do 100 investments per year. The last 10 years, I haven't taken a lot of days off, but it's good fun, obviously. So exciting, especially right now with all these new trends emerging to try and ride those waves, really.
Very cool. And I'm curious. The first question I have to ask you about is you mentioned about that. Well, there's loads I want to ask as first questions, but I have to pick one. You mentioned that initial exit that you guys experienced. I'm assuming you were around for that because you joined a couple of years into the journey. You mentioned, right?
Yeah. So obviously it took 11 years to exit.
Of course,
It's one thing you learn is how patient you have to be in this
of course,
this game.
It's a story of overnight success, right?
Exactly. Especially those big exits. They take a long time. They take a really long time. So when I joined I joined after the very, very first round had happened already. So it was very much, Steven, our founder, and a couple of his friends, really, taking a huge gamble on those 3 clever Oxford grads who had, a very clunky product but a good idea and, tons and tons of energy. And that very, very, very first investment did really well. I joined, it was already kind of, I think they had just raised a second round, so kind of on the seed trajectory. I joined just before the sort of VCs got involved and sort of journey from that. Which actually is the point where usually we sort of take a step back and we, as investors, we're not so useful to you anymore. You've got lots of very clever investors on your board who have experience, building, big teams, international expansion. That's not really our game. Our game is very much, helping you raise that first round and, making those first key decisions, building your initial team and making sure, you use your limited resources very smartly. That's what we're good at. And then hopefully a couple years later, you've got, people who are better than us at, the next phase.
So handing over the reins, as it were.
Yeah, exactly.
But I'm curious to know, like that exit, I mean, that's quite a big deal, right? So what occurred in the office that day when it was confirmed? Was there a celebration? Was it just business as usual? Did everyone just kind of tell me about that? Something must have happened, right? There must have been some cheering. There must have been something when a 500 million sort of deal of one of the early investments of the business sort of paid off, especially over that length of time.
Yeah, well, that's the thing. It's quite anticlimactic.
Really?
I would love to tell you, there was champagne. And
I'm hoping. I was expecting it to be kind of like Houston in NASA. When the takeoff is successful and everyone stands up and cheers and it's all not like that.
Not really. No. Because the thing is, when something happens over such a long period of time, it's an 11-year journey. So let's say from year 2 in that journey, that something really good is happening. So the whole time, actually, you set your expectations really.
Right.
So the company had raised, over years at quite high valuations. If you go back 5 years, we probably had hopes that the company would IPO, before that would reach unicorn status. I'm not going to tell you that we're disappointed by the 500 million exits, but it's just like everything in life, it's relative to your expectations, and it's very easy to build up your expectations quite fast in this world. You see companies, and I think we've been doing this long enough that you see companies doing this and that. You learn to kind of cool your nerves and.
So even if they have all signs of unicorn status, IPOing, big exit or something, even if they have all signs, you still have learned. Do you know what? Let's just wait. Is that what you mean?
Yeah, let's be clever. Let's exit at the right time. So in the case of Fido, to give you an idea, there was a secondary round 2-3 years ago. So secondary round is basically as early investors or early shareholders, including the founders, you're allowed to sell some of your shares to new incoming investors, right? So the company has not exited technically, it hasn't been acquired, hasn't IPO'd, but you can sell, there's a bit of liquidity for the early shareholders.
A bit of an early cash out kind of thing.
Yeah, exactly. And the return we made then was actually the same return we made on the full exits. So that's what I mean by, and it's a very good return. We're talking more than 100 times return, right? So everyone was very happy. But it's all relative to expectations. You had set your expectations at that level, so you kind of hopes maybe it will, it will beat that in the future. Still fantastic results, still a fantastic story. And Hussein,
I also imagine as well
onto great things. So.
Yeah. But I also imagine as well, because it's quite a long process, that I imagine that there isn't really a single defining moment to say it's done as well, right? So like you said about the opportunities to sell some of those shares and initially as well. So it's all kind of very much spread out over a long period of time. So even the win is kind of diluted, I suppose. So you can't point to it like it's done, yay, and then everyone celebrates, right? It's incremental wins.
Exactly. And that's talking as investors, where you're not as involved in the journey. The founders usually will tell you it's quite a depressing moment, the exit, because you've had your head down for 10 plus years, and in the case of Onfido, some of the founders were not actually involved in the management of the company at the time of the exit. So it's all quite bittersweet in many ways. It can be, when you sit on the outside, you just imagine it's just happiness and glory. And actually, rainbows, it's usually not how it is. What do you do next?
Well, just the process of the exit itself is again, it's very long. It can be very grueling. Yeah, it's a lot of admin. It's quite a dry process, and then depending on who you're selling it to, I suppose it can be even drier. But we've had people on the show before talk about that process, and the reality of it is it can be very brutal. Like, we've had someone on, I think they mentioned it was like about 16 or 18 months of a process, and it was just admin for that length of time. Will they do it? Won't they do it? Will they do it? Won't they do it? Tough.
Yeah, and it can be quite confrontational, between you're managing different parties, not just with the buyer or the lawyers, representatives. It's also internally, people with different incentives, different motivations, different views on the and then you kind of have to manage that. So when you get to completion, you
just want to lie down, probably, right?
exactly.
And for the first time in like 12 years, just like I just want to sit in a bar and have a beer.
Exactly. Honestly, as investors, you're experiencing 1% of that pain. So I'm not going to pretend that so this really is the founders who bear the weight. So that's but generally, I think anyone will tell you, those big exits, those big returns, they were such a long time in the making that there isn't exactly like you said, there isn't like a one, I guess when you got the email, you get the announcement, you get the phone call that something's happening, it's quite exciting, it gets your heart pumping a little bit.
But there's not that one champagne popping moment, really. It's a bit more complicated than that.
Yes.
But I suppose we're painting it out to be potentially, it might be coming across as a fairly negative thing. I suppose for clarity, it is also an amazing thing that is happening for the founders, for the business, it's what everyone's working towards. So I suppose it's just good to paint that reality, to make it clear that nothing is achievable on that scale without an enormous amount of hard work. And I think that's the misconception, I think, for a lot of people out there outside of this world or who haven't experienced this. It's just like you build a company and you sell it and you become a multimillionaire. So, well, no. There's a lot more to it than that,
100%. And it's also a reminder to really, it's a cliche, but to enjoy the journey. For me, for example, with going through these various phases with companies, I'm more convinced than ever that what we do, which is the very early stage pre-seed bit, it's quite messy, it's crappy, it's not there's not a lot of money involved in that, but it's the most fun part of the journey, no doubt about that. But, so
why do you say that? Why is it the most fun?
It's the early days where you work directly with the founders. Everything is possible. It can go in many different directions. Every win is actually celebrated, like you said, like a big win. Every new client is a big win. It looks so exciting the early days. As you grow, everything becomes a bit more diluted. There's more processes. You maybe, it's less of a direct reach between the founders and the business. If that makes any sense. It's a bit more, there's a much bigger team, a lot more governance. The challenges become about, international expansion, new markets, hires, fires. It becomes different. It's also very interesting, and there can be a lot of drama at that stage as well. Don't get me wrong. But it's the first 2, 3, 4 years. They really were, the foundations are put in place, and it's a bit of a miracle phase. If you know what I mean. So few companies actually, successfully go through that early phase. To actually, make it. Is feels like a bit of a miracle when we do. Whereas when the next phase, expectations are set again. how do we get to unicorn status? How do we IPO? And it's a completely different game. It's also interesting, obviously, but
yeah, I mean, it's interesting. It's the exact same reason why I've been drawn to work into startups. Basically, it's for the reasons you mentioned there. There's that innovation. There's electricity. There's everyone. There's just such an enormous amount of passion around trying to move mountains, trying to create miracles, like, and willingness to experiment, put yourself on the line, the willingness to look a bit stupid if you do something wrong. Like, there's just all of this energy. There's kind of like an organized chaos. I often describe founders as chaos shepherds, right? That's pretty much what you are. You're continuously trying to shepherd chaos to do what you want it to do, to go from that field to the other. And it seems impossible, but somehow they manage to do it.
Hi, a friendly reminder to share this episode with your network, like, and subscribe. And if you are feeling really supportive, please consider reviewing the show on the podcast platform of your choice. It all really helps support what we do. Thank you. Now back to the show.
So I get it. I get the love for it. And then I've been involved in startups that have gone through the VC route, the Silicon Valley startups, gone through the VC route, gone Series A, Series B, onwards, and everything changes in a very unusual way. Right? It's not good or bad. It's just it works for some people. It doesn't work for others. And in fact, the people that I've noticed that seem to struggle the most with it are the founders. Interestingly enough.
Oh, for sure.
Yeah, because you work in that scrappy startup style for like 5-10 years, and then suddenly you've got bosses, really, and it's a corporate environment, and you don't have the same role anymore. It's a huge culture shock.
Absolutely. And quite often the founders were there in the early years are not necessarily those who took the company to an acquisition, as was the case of Onfido. It's I'm not revealing anything. Who's saying the CEO, the founder who started the company, was no longer the CEO when the company exited, and that's not necessarily an easy transition to make. There's an easy decision. It's no longer just your company. It's no longer just your there's other shareholders, other decision makers.
It's bigger than you then at that point. But I'm curious to know, actually, this is an interesting point, because I've asked a few people about this, and I have some fairly strong opinions on this. Do you feel that the early supporters, so whether this is through various funds, angels, VCs, etc., do you think that it's maybe on them to try and do a bit more in terms of support to prepare them for that potential outcome, for that potential culture shock, so that that's less likely to happen, so that they are a bit more mentally or even professionally prepared from a skill level, right, to make that adjustment, so that we increase the chances of the founders that originally created a business being more secure in essentially not being pushed out, and that they're more likely to be there until the end? Do you think there's some responsibility there, or is it ultimately just down to the founders?
I mean, it's really important that the founders have the right support system, that's for sure, whether it's your early shareholders, whether it's mentors, who you have on your board, who you have as advisors, who you have as mentors, have people who have gone through each of these phases. So you're going through, the Series A phase, make sure that, whether it's on your board or it's, more informal than that, make sure you've got people who have gone through this particular phase quite recently, ideally, and, that, can bounce ideas with you. And once you get to the next phase, then, have new people, replace those people and have a new, set of people who have, again, gone through this phase that you're going through quite recently and can work with you. And that's, that's not an easy thing to build, that kind of support system and network. It takes a bit of time to you have to invest time in building that. It's really, really important. For us, we've now gone through this. So you have to experience it first before you can give anyone any sort of valuable input to a founder. So I think it's quite helpful that we've now seen companies like Onfido, Cognizant, another one that's gone through that kind of Series A, B, C. You learn from those experiences, and then you can bring that to the next time that happens. But really, as a founder, really important that from the get-go you have people who mentor, who have gone through this next phase that you're planning to go through. I think that's really, really important. And to constantly build up that network, because you are going through new challenges, you are going through new and the people who were advising on the previous phase maybe not so relevant for that where you're now going through or what you're about to. So that really importantly, you have the right people advising you, and that's obviously easier said than done. How do you build trust?
Well, it's also easier said than done, I think, because identifying when something is shifting or changing is very hard to do from certain vantage points, right?
Yeah.
It's this idea of if you're there staring at a mountain for 1,000,000 years, you wouldn't notice it disappear. Every day it would just look like the same mountain. It's that same kind of thing. And I think when you are, especially in leadership positions, within a startup or any business for that matter, change is quite difficult to notice until it's quite often too late, and that can be very difficult for to secure your own career trajectory, your own career development, and even recognizing like, oh, I need to develop this skill because that's going to be needed soon. And if no one's telling you because you're at the top, because no one does, right? That can make it very difficult. And the next thing you can be kind of redundant in your own business. I think that's much easier to identify, and not always possible, but much easier to identify for your team members. Like, I want you to stick around, which is another thing I have quite a lot of opinions on in startups. I don't think enough is done with that, to ensure that the early team, for example, is kept close. Because I think those are the people that have bled for you and probably some of the most loyal you'll ever find. And unfortunately, what you tend to see is very few safety precautions are put in place, career development plans to really sort of try and progress them and ensure that they are still a good fit and prepare them for the new shift. But no one's doing that for you, and so it's something I think about a lot, and I've seen a lot. And I've worked with quite a few startups over the years to try and find a methodology for, with varying degrees of success. But it's something I'm quite passionate about, because I feel like we have to be very careful, I think, there, because of actually that well can be poisoned otherwise. And that can either make or break a startup too, and affect its chances of exit or an IPO or something like that as well. So
that's very true. Yeah, no, that's very true. We know that many ways, we we see these companies raising tens of millions, and then we sort of expect the founder to get on with it, and that's a bit unrealistic. It reminds me, it always surprises me in a completely different field, in football, when you see these kids effectively, like 20-year-olds, being bought by this big club and suddenly getting tons of money and huge pressure, huge responsibility, and actually when you look into it, they actually get very little support on how to manage that mentally and psychologically. And
right.
It's a very similar kind of situation. We put people in these positions and just expect them to get on with it, but and neglecting the whole psychological aspect of it, and how what do we expect these people to grow into, and how do we help them get there? A bit unfair, obviously. There's every VC fund will tell you that that they're bringing a lot of time and resources into this, but the reality is that when
not
you're
for
in the
this
trenches,
particular thing.
Yeah, exactly. It's not as you say, the whole career development, and that's largely ignored. And in some situations, it can be that it's not necessarily a bad thing that the founder is no longer the person running the company at a certain stage. But I mean, you look at those big, obviously all the big US successes, they tend to have been the same person founding and leading the company today. So
that is a good point. When you look at those the celebrity entrepreneurs of the world, they are generally in that category.
Yeah.
Interestingly, you've got not an enormous amount of kind of hired CEOs that are kind of the figureheads. It's not as common. Like, okay, you have it for companies like Nvidia, Disney, and things like that, and even Microsoft and so on. But yeah, just it's not. They don't have the same gravitas from a public perspective, I think, as the ones that created the startup in their mum's basement, like. For some reason, and for good reason, I would expect.
Yeah, exactly.
Speaking of brand,
careful with. Sorry.
No, go ahead.
No, I was just saying you have to be careful with the survivor bias, obviously, and sometimes there's such extreme outcomes. The Facebooks, and there actually aren't that many lessons to draw from them, because it's such an unusual situation, such an unusual.
It's an outlier
group of people. It's a complete outlier. You can't really apply much lessons sometimes. But still, it'd be nice to have those situations once in a while here as well.
Yeah, it would, and I think it. I don't know. I just see it as a kind of a potential. It's something that should be thought about a little bit more, maybe by the ecosystem at large. What can we do wherever possible? What can we do as a main principle to keep the original team, if it's appropriate to keep the original team? Because the qualities, I would assume, for the most part, in most situations, the qualities that they have that can contribute towards the startup far outweigh any qualities that they don't have that match the current stage. In most situations, if you were to measure it up, probably, because of actually. Especially when you factor in the fact that they were part of the business very early on, that they laid the foundations, that in of itself is so valuable. Because finding loyalty, finding people who are really willing to be with the ship as it sinks is such a rare trait. Like, you want to keep those people around however you can.
Yes.
Really, unless that I don't know. I guess maybe I'm a bit idealistic like that, but
I think there's very pragmatic reasons for that, because if you think in terms of attracting talent, attracting capital, it is much better to have the founders stay at the helm of the company. It makes it a much more attractive proposition, probably for consumers as well and users of your product. You will be drawn to the company probably in a very different way if it's still founder led. So there is a very actually pragmatic reason to do that. So I agree with you.
It's not always realistic either as well.
Yeah.
No, I get it. But speaking of kind of branding and so on, I wanted to ask, actually, no, I'll wait for that because I might be jumping ahead a bit. I wanted to actually quickly ask about your backstory a little bit. So you talked about how you joined with your colleague in SFC sort of in about year 2 of SFC. But like, what were you doing before that? What was your background and so on?
Yeah, so I was, I guess, finance guy. So I was working in investment banking before, knowing full well that was not where I was planning my, entire career to go to. That's kind of, what I wanted to do out of, school. Kind of wanted to get that experience. But always knowing that I actually wanted to do something a little bit more exciting than that. And I knew I wanted to get into the startup world in some ways, but I didn't really have any ideas myself. So what I did effectively at some point, I quit my banking job because it's quite hard to, while you're on the job, to actually figure out your next move. So I quit and I just met as many people as I could. People who were starting companies, applying for jobs at tech companies that were emerging, doing interviews and just going to events, meeting lots of people to kind of make something happen. And my idea was to either what I knew I didn't want to do was join a VC fund. I knew, it made no sense to me that I could be in a position to invest in companies at that stage without knowing what it takes to go through, founding a company in the early days of the company. I didn't see myself going into like a Series A, Series B fund, not having gone through the cycles, either as a, in some capacity.
I wish more VCs thought like that.
Yeah, I mean, I think a lot of people are now. You see a lot of VCs now. They will have some form of entrepreneurial experience usually now. I think it's really important. And in my case, it meant either joining a startup or joining on the investment side a firm that gets involved from day one, basically. So it could be an accelerator, for example. And I ended up being SFC. So I met with Stephen. SFC at the time, small syndicate. I saw the opportunity to build a fund. It was quite an entrepreneurial venture in many ways. Because the way we raised this fund was actually, I don't know in what level of detail you want to go into, but we don't have your typical kind of LP base. We're raising money from thousands of people every year. So there's actually kind of a mass market aspect to our business. So I thought it was quite interesting. And obviously we get involved with companies. Typically the company is 6 months to up to 2 years old by the time we invest. It's quite early days. So I thought like, okay, let's get involved with that. Let's see where that leads me. And now it's been more than 10 years I've been doing this, and because it's quite fun. It's growing. There's we are a fund, we're an investor, but we're also a business, as I said. We have to worry about our customers or growing our customer base. So I quite like that. It's quite varied. The work is so varied, and I stuck to it. There were along the ways opportunities to do other things, but I thought, this is so much fun.
I have to ask, like, we've had a lot of people on the show that their background was in, well, all kinds of stuff, but there is a subgroup that the category, I guess, that you fit into, which is from the investment banking world. And almost every single one has said the same thing as you, which is they knew they didn't see themselves doing that forever. What is it about investment banking that is that laborious? Like, because from the outside perspective, it looks like, it's a well-paid job, it's secure, it's leveraging quite a broad skill set. Without asking you to like shit talk the industry, like what is it about that space that made you say what you said? Like, I knew that I couldn't see myself doing that forever.
No, I think it's a very good job, but obviously you're working in, you're part of an institution, you're part of a team. The work is very challenging, very interesting, but you're not, you're not really up until the point where you're actually driving deals, which is quite late in your career. Let's say it's 10, right. 15 years into it. You are going through, the motions. It's all about, doing good work, doing what you're told in the best way possible, probably being a bit proactive, and you can be quite entrepreneurial, I guess. But, you are part of an institution. You are following, you're not yourself deciding what you're going to work on tomorrow.
So it's some element of being like the cog in a machine in a way is
yeah, that, exactly. And very much, the deals that are happening, they're not so much happening because of your, how clever you are and what, it's the clients are coming to the institution in the first place. It's the name of your bank. That's the service of the bank. The brand that the bank has.
Rev Ops leaders, let's be real. You can't optimize what you can't measure. You've got the dashboards, the pipeline data, the forecasts, but what about your sales team's actual skills? That's where Peer, today's sponsor and my startup shamelessly, comes in. Peer runs remote, expert-led sales skills audits. Think of it like a MOT for your revenue team. Instead of guessing who needs coaching or relying on lagging performance data, Peer proactively identifies strengths, skill gaps, and hidden risks before they impact revenue. The best RevOps teams run these audits regularly, creating a structured AI-ready data set that powers smarter hiring, sharper enablement, and faster revenue growth. The best part? You can get started with a free discovery audit plus 20% off your first full audit today. Just click the link in the show notes or use the QR code on screen, and you can start making data-driven sales decisions today. Now, back to the episode.
I wanted to be in something where, it felt more like, okay, that's the direct result of my work. That's, those things are happening.
More direct impact.
Yeah, exactly. And,
right.
So I guess and I could never see myself going back into a more corporate environment now. I think, I've been doing this for too long now. I need to have that kind of direct control and direct impact on what I do. But it's totally fine to be someone who thrives more in a more corporate structure, in a bigger structure where you obviously have a lot more resources. You're working with a lot more colleagues. They can be you're working on much bigger deals. It's quite interesting as well. But it's completely different. So you kind of have to know yourself what what brings out the best in you. In my case, it was very clear that I could do a decent job, but I would never be in the top 5% because that's quite brutal.
I was going to ask, is it quite a competitive space?
Yeah, it's competitive, well. And it's actually not. I quite enjoy this. The startup world is also quite competitive. I enjoy that. It's more, it's the idea of, it's very much, about being seen as well, about moving up the ladder in the right way. And I'm not,
right.
dissing it in any way, but it's how the game should be played. It's absolutely fine. A corporate environment, we reward certain types of behavior. Whereas if you work with, we're a 15 people company, it's completely different. The way you impact things is completely different. And quite a lot of what we started from a blank sheet of paper and grabbing opportunities as they came, etc. So that's how I bring the best of myself.
So I imagine there's, because of that, some sort a kind of the corporate game that needs to be played in order to be recognized. Yeah. And I guess some people play that fairly, some people play that unfairly. And maybe it puts you sometimes in a bit of a situation where you're thinking about the ethical choices you maybe have to make on a daily basis.
Yes, but I wouldn't go into, I would never say that the world that we're in now, that I'm in now, is in any way more ethical.
Of course, yeah.
Yeah, I mean, the level of, for example, I mean, the level of bullshit in the startup world,
just in the world in general, but yeah,
just in the world, but you deal with, and you kind of have to play the game as well to some extent. But it's, there's no moral superiority on my part, so that this world is more, it's just very different. To me, it's actually much more about, it's the level of control you have over your life and your work and the direct impact that you have. Whereas in a more corporate environment, it's more about, you have to do your job, you have to to deliver, but you also have to be seen and move up in the ladder in the right way, etc. So different dynamics, and you kind of have to know quite early on, ideally, which environment is the best for you, and sometimes only by doing that you discover that. We have invested in founders who turned out that they probably were a better fit for more corporate structure, and that's absolutely fine. Unfortunately, sometimes you have to go through that journey to discover it. There's not right and wrong with this. It's about knowing yourself.
Do you find that this is at the very least a less stressful environment to be in, or is it just a different kind of stress? Or?
It's no, I wouldn't say it's less stressful. It is less stressful in the sense that you're more in control. And I find it very, very stressful to have, my boss telling me on the Friday evening that I have to come to work over the weekend and work on this super urgent deal that, I knew nothing about 2 hours earlier. I find that quite stressful. You're obviously working on tight deadlines, huge deals, so that can be quite stressful. Whereas if you're working in a small environment, small firm, very different kind of stress. You're actually stressing about, I mean, in the early days, there wasn't much money there wasn't any money to pay ourselves in the beginning. So, how am I going to, meet my financial needs next month? This is a different stress. So, and, then you have, your first hires and your first team members, and it's becoming a different kind of stress as well. How do we make this an environment where these guys can, survive and hopefully thrive? And, so it's different. It's different. And obviously when you're early stage investors, you deal with, difficult situations sometimes the companies you invest in, founders disputes and failures. And that can be, that can take its toll as well. There's always, difficult situations and fires to put out. So, and it's full on as well. Like I said, not many days off. I'm not complaining because, I could probably take more days off if I wanted to. But there's always something going on. So... There's always exactly, and there's always something going on. There's always urgent things to address. So whereas I think if you're a more corporate environment, you can probably have more, bigger teams that can pick up the slack and can take your time off in a different way. So it's just again, it's different types of stress. So you have to know what what's best for you.
Yeah, which takes time, right? Because to know yourself in this world isn't easy. It takes a lot of time to know what you excel at, what you don't, what you like, what you dislike, and that also changes over time, right? To go back to that mountain analogy,
that's true.
We're not only staring at the mountain, but as we watch the mountain change, we're also changing too, which means it's even more difficult to observe the changes occurring, right?
Yeah, and I'm always surprised. The only way to discover that is by actually doing it. So the only thing I'm a bit surprised is people who sometimes, complain about their life and job. It's not so easy to make the jump to do something completely different. But you can take baby steps into that direction. You can maybe start something on the side and see how you feel about differently. You can get involved in without necessarily quitting your job overnight like I did. But I wasn't in a position where I could do that. I was in my 20s. It's not, I didn't have any big responsibilities. Different when you're a different stage of your life, of course. But there's always ways where you can test yourself in those situations. See how you feel about it. And, do you enjoy it? Then maybe, take an extra step in that direction. And maybe you do end up quitting your job and starting something new or joining something early. So, But the only way is, is by trying it, actually putting yourself in that situation to discover how you feel.
Absolutely. Yeah. Do something about it. If you're not happy, do something about it, right?
Yeah.
We usually have a lot more control than we realize over these situations. I always remember,
Exactly.
I don't know why this just reminded me of this. It's so bizarre, but I'll tell you anyway, because why not? It's my show. When one of the very, very first jobs I had, after like a paper round and stuff like that when I was a kid, right, was doing a couple of shifts at my local supermarket. And I will always remember my first day at this supermarket. It was in the warehouse, right, stocking shelf. Putting stock away from the lorries and all that. It was really, basic job, but I was happy. Like I really wanted to work when I was younger. It was one of the things I wanted to do as soon as possible, because if I worked with my father on building sites and stuff when I was like literally from like the age of 5, like he got me involved, and he was an entrepreneur and he owned his own business. So I wanted to work. That's what I wanted to do more than anything. Start my own businesses and things like that. And I was so excited to be there because this was, a bunch of people all doing. This was the first time I was surrounded by, the machine. Like it was orchestrated. There were people doing stuff. They were like, and I was like, this is awesome. Like this is cool. This is a business. Like it was co-op. I think it was, and I was like, this is cool. Like And then I will never forget how I got a really strong taste of reality when it came to people, which eventually led on to me wanting to understand the sociological aspects of work, and then actually brought me into an area of specialty I focused on for quite a while, which was groupthink and group psychology in the workplace specifically. And this was when I went to the break room. And this is when I first properly met people for the first time. And I was there making a cup of tea. And I'll never forget this. I walked in and I'm like, hello, everyone. Nice to meet you. I'm happy, right? And I'm talking to her, I'm making a cup of tea. And I'm just, all I can hear around me is complaining, moaning. Oh, this guy doesn't do this, and then people arguing with each other, and this guy's, the boss is a horrible nightmare. It was all so negative, and my positive energy was sucked out of me, immediately sucked out of me. And it was such a brick wall of negativity. It was palpable. And I remember it really, really affecting me. And I tried to stick there for a while. The job itself, I was happy when I was doing that. I could not stand being in that break room. I managed to find a couple of people who were a bit more like me, and I kind of stuck with them for a while. But in the end, I had to move on just because of that. And this is as a young kid, and me thinking, this can't be how I end up, surely. Like, I don't want to end up like these grown-ups, because I'm still a young kid at this point. I can't end up like that, surely. Is that my destiny? And I remember very determinedly thinking to myself, do not end up like that. Be grateful for the opportunity, wherever it is. And if you're not happy, do something about it. Because that's all I could end up thinking. It was just like, if you don't like it here, change something, and I know that's not always easy for people. And sometimes it's impossible, but I can't imagine for every single person in that room, they weren't able to make a change, right?
Yeah.
You know what I mean? I don't know. It was just an interest. I don't know if that's at all relevant or interesting to you, but it just popped into 100%.
My mind. Yeah, that's a great experience to be able to experience that at a young age as well. See that, and to know that that's a situation you want to avoid. As you say, it is a privilege to be able to move in different directions. Sometimes I find people who have the opportunity to do it don't exploit it to the fullest.
Or they don't realize they have that opportunity.
Yeah, exactly. Sometimes we feel stuck in life, but actually, there's always a different path you can take, and it doesn't need to be drastic. You can slowly move in that. But it's actually, as soon as you take that first step, it's actually quite often it leads to other things, and it's quite it brings back some excitement in your thinking. You think more positively, and easier said than done. I fully recognize I've been very privileged in my life to be able to make different decisions.
I think it also comes down to appetite for risk, right? We talk about appetite for risk in the startup world quite a lot, but more broadly speaking, I mean, even if let's say you've been working like stocking shelves or on the as a cashier for however many years, like 5, 10, 20 years sometimes for some people within maybe sometimes still from coming straight out of secondary school for a lot of these people, like for them this idea of moving and changing job to even to go to another supermarket is like a huge risk. And this is the thing that I've learned to appreciate over the years. I think my thinking has changed a lot since then, which was like, these guys are idiots, to actually having an enormous amount of sympathy, for them.
Exactly.
In understanding that actually it's not as simple as it seems on the surface. Like for me, I have that appetite for risk. It's easier for me, but not everyone thinks the way I do. And once you start framing it like that, I become more empathetic to it to a degree. The complaining bit still not so much, because I still think the words we put into the world matter and have an effect on the people around us. And I think we need to be mindful of that. But at the very least, this idea of me just going, well, just quit your job if you're not happy, that now I realize isn't as simple. Do you know what I mean?
Exactly. I mean, to bring it back to the startup world, I think I would say off the top of my head, at least half of the companies, probably more, that we look at, that we're considering for an investment. The point at which we consider them for investment, as I said, the company is on average about a year old. I would say about half of them, the founders still have a day job. Very rare that the founders are full-time on the startup at the point where we consider them for investment. Sometimes
that's quite often the reason why they require the investment, right, to make that jump. Yeah,
exactly. And I think, but nowadays, there's quite a lot you can do, without having to go all in, full, quit your job, take massive risks with your life. There's quite a lot you can achieve and do and prove before you make that jump and raise money and really go for it. And so it's what I mean by this kind of a baby step approach. You don't feel like you have to take a huge overnight risk, because that's not really how it works anymore. It's make sure you've got a team. You're working with people that you like and are complementary with, and that you build something before you really give it your fullest.
Yeah, absolutely. But it's it's interesting because so I do quite a lot of mentoring stuff and advisory work, as I mean, that's my main business. Like talking about having a startup and your day job. My day job is advisory, commercial advisory and fractional CCO work. But I also do additional sort of work too. I do a lot of pro bono work, and I work with some local organizations and some national organizations to provide sort of basic business support. So less startup worldy, less tech startup worldy, and more just like grassroots brick and mortar businesses. Basically it's free support. It's funded by various organizations and things like that. For people who just want to start a business at home, there's one that I work with ex-offenders, and another which is in my local community, and things like that. And what I encounter quite a lot of is these barriers that you don't really encounter so much in the startup world, which is poverty, very complicated family lives, sometimes things like addiction, homelessness, all of these things. And then on top of that, you have, they're trying to work full time, an enormous amount of hours, and then they've got a business idea. And so then suddenly you have to think very, very outside the box. Like, how can we get this person to support? And the reality is the support just isn't there for people like that. We've built an infrastructure to support people to build businesses in the way that we more, usually see it, which is you've got a corporate job and then you've got a side hustle. We can work with that. But when you have someone with that level of complexity, and there are some amazing ideas out there, like some amazing ideas, and not even like tech startup ideas sometimes, like just great business ideas, to open this shop or to create this bit, and you're just like, man, and they've got the passion and they've got the vision, and you're like, but your circumstances just make it really hard, and you just want to pull it out, you just want to make it happen, and you can, but it requires a very different set of problem solving skills. Do you know what I mean? It's very unique. It's like the order of priorities is very, very different all of a sudden.
Yes, that's very true. Yeah, and that's not an easy problem to solve at all. And as you say, the startup world, everything's quite geared to quite a privileged crowd.
To a degree, yeah.
That's very true. That's very, very true.
But I believe that I think I would really like at some point in my career, maybe not now, I'm focusing on my own startup and everything else I'm doing, but I think at some point it would be really nice to work with bridging the gap between these two worlds, because I think they both have so much to offer each other, so much to lift each other up, to learn from. It would be really nice to see more of the startup world supporting this sort of more grassroots brick and mortar kind of business, aspiring business owners. And vice versa. There are some amazing business owners in that world that could teach a hell of a lot to the relatively green and naive startup, founders. So
Yeah.
it'd be really interesting to see how we can bridge that
Yeah.
gap over the next couple of years, I think.
If you are enjoying this episode and want to support the show, please like, subscribe with notifications turned on, and let us know your thoughts and opinions in the comments below. This lets YouTube know we are doing something right. Back to the show.
100% agree with you.
Yeah. Anyway, that's me just dreaming. I quite often do that in this show. It's a good excuse, this show, sometimes for me to just talk absolute nonsense that I dream about sometimes. But I do want to ask you about something I was about to ask earlier, but I stopped myself, which is about this idea of branding, and specifically when it comes to funds, because of SFC has positioned itself as, well, what does it say on the website? So on the web, you Google SFC, is it SFC Capital, the leading SEIS fund. So I'm curious to know why is that important as a form of branding for SFC to be known as the leading SEIS fund, and what is the idea of that? Because if funds seem to take various different approaches here, some really want to be known as as a specifically an SEIS fund, and some don't. And what are the advantages and disadvantages of positioning yourself like that?
Yeah, it's a very good, interesting question. So, just maybe explaining what SES means. So SES is the Seed Enterprise Investment Scheme. So in the UK, we have this fantastic tax scheme to encourage investors, so private individuals, to put money into startups. So there's a huge tax relief, income tax and capital gains tax reduction if you invest in startups. So by startups, we mean real startups. So to be eligible for this tax break, the company needs to meet certain conditions. We're talking about very early stage companies, basically. So most of the money that we invest roughly about £20 million per year at the current rate. More than 15 million of that is under that tax scheme. So this is what we specialize in. So it means that the people we need to attract are investors, so individuals who probably don't know about this scheme because it's not so popular relative to how generous it is. So we need to attract as many people as possible who have the financial means to invest in companies and will be interested in the tax relief, but also in the actual investment opportunity to invest in life science, medtech, AI startups, etc. And we also need to attract founders who are raising their first round of funding. So going all in on the SES keyword kind of achieves that in a way, because no one else is really doing that to that extent, which is what so it took us, we had a different branding a few years ago. If you went on our website, SES was maybe not even mentioned, or maybe it was mentioned in passing. And we were more about, we invest in startups at a very early stage, we support them, we're sector agnostic. We will support you in your journey from pre-seed. None of that actually tells you really what our USP is. And actually our USP, our unique proposition, is actually to be the leading SES fund, to be the only fund in the UK that went all in on this great tax break for investors, but also opportunity to invest in very early stage startups and to help those founders with their first funding round. So we're not an accelerator, we're not a VC, we're an SES fund. So at some point you understand that you talk to your investors, you talk to the founders. Why did you come to us in the first place? Well, I was looking, if I was an investor, I was looking for, I just heard about this great tax scheme. I searched around and I found you guys, and then I discovered what exactly you invest in, and I thought it was pretty interesting. So, went with it. You talk to the founders. I was at the stage where I went through an accelerator. I need to raise my first funding round. Discovered that I was eligible for SCIS, so I looked for investors who invest under the scheme, and you guys came up. So at some point you realize, okay, that's actually what people come to us for. So let's double down, because no one else is really, we're in the world, but I think it looks cooler to call yourself, to play more the kind of VC, to build your kind of VC like Sequoia, the type of branding.
Well, I don't know. I think that's losing its shine a little bit. There was I saw an interesting post yesterday where someone ran a poll of who they would prefer to raise funds from, and angels were right at the top, and VCs were right down at the bottom now. Yes. Even just 6 months ago, that would have been entirely different.
Yes, that's very true. That's very true. Exactly. So this is changing. But obviously, SCS it's a tax scheme. It's not, particularly, it's a bit dry in itself. But at the end of the day, it's a fantastic tool we have in the UK to, help founders, raise their first round and get started. And it's actually in many ways to take a step back. It is a fantastic scheme that effectively kind of a Robin Hood type of scheme where most of the money that we raise is coming from investors, really city people. Like that will be your average profile, someone working in the finance industry earning, a lot of money, paying a lot of taxes, and quite interested in offsetting some of the taxes while getting exposure to this exciting new world that they maybe don't know so much about and couldn't access themselves directly. And that money we raise and then invest in typically young founders, who, don't have the same circumstances and are building something new, very innovative. So there is that, transfer of wealth that I find, extremely healthy. No, it's just a brilliant scheme. So, to what we've decided, in a way, we didn't have a cool name. SFC, doesn't mean anything to people. We didn't have a cool brand. We didn't have, a very unusual story. So let's go all in on this brilliant tax scheme and call ourselves, and tell the world that, this is what we specialize in. We are the only firm that build entire operations, entire systems around, being the best SEIS fund that we can be. And that's worked quite well, actually, because the awareness of the scheme is growing. So, I very, very rarely use myself the kind of VC terminology. I never call ourselves or myself a VC. I rarely use the term pre-seed and seed, even though I probably did on your podcast already. But this, what we do is SEIS investments, a UK-based company raising your first round. Come to us. You're an investor who would like to invest in startups. Maybe you don't have access to deal flow directly. Come to us. We've got a great solution. So this is basically building your brand about what you actually do and what people actually come to you for.
It's just, I think it's interesting for our viewers and listeners to hear all this too, because the majority are startup founders or people interested in the startup world and things like that. And what it's showing is something that I've been fortunate enough to know for a while, but many don't, which is, you go through all of the exact same journey pretty much on your end, and as do many funds and other SEIS funds and all that sort of things. As the startups themselves, you have to, go through that initial scrappy phase of trying to find product market fit. You need to find the area to niche down on. You need to find the right messaging. You need to, all of the same thing, the team problems, the talent issues, the scaling problems, like you said, the early days of not being able to even pay yourself salaries, and like all of this is still applies to you just as much as it does for the founders and the startups you're working with. And why I wanted to pick up on that messaging and branding thing was to kind of highlight that, because it seems like you guys have found your niche, you found your ideal customer profile, both in terms of, I assume, probably founders to a degree to invest in, but also investors to join you on the journey. And so you've sort of matured now. This finds the journey of being pretty confident with where you are, essentially, as a part of the ecosystem worldwide, right?
Exactly, 100%. Yeah, It's. I think at the end of the day, sometimes you build your brand and your messaging around what you think would be, the cool thing to do. What would make me look good. But actually, that's not what branding is about. The branding is about, communicating what will drive people to you, to come to you.
And the right people to you, right?
The right people to you in a very concrete way, people have very short attention spans. So they're not, going to wonder about, what you mean by your, fancy terms and fancy brands and fancy logos, etc. But keep it quite simple in a way and obvious. So I think that at least in our case, that's worked quite well. I'm not a branding expert by any means. It's quite true what you said.
It's very hard to do.
Yeah.
Because we're doing it right now. I'm in that process right now. I mean, we went to market, technically, very early, tentatively gone to market, beginning of this year. As of filming this, this will come out way later, but we're sort of approaching the end of February. And really, this month we've started only in the last couple of weeks announced our raise and all that kind of stuff. And it's been really difficult because the way that we present ourselves to investors versus the way that we present ourselves to prospective early customers is entirely different. And you have to hold these two very contradictory sets of messaging in your head at the same time, and they have to continuously evolve because based on the data you get from both parties, we go, okay, that didn't quite work, that didn't quite work, and it's very difficult to do that, and you don't get it right. You know, like I was at a pitching event last night where I had 99 seconds to pitch the startup, and it was a room full of both investors and prospective customers. That was like the impossible task. Not only was it 99 seconds, it was the first time I've pitched in front of a room of people, the company, and I had to try and pitch both. It was very, it was very hard. So it's just about getting the data, getting the feedback, and like, how could I have done better? Did it make sense? You know, what resonated, what didn't, etc. But it's really hard.
Trial and error.
That's
absolutely.
What it is.
Yeah, there's no other ways. Yeah.
You can't be afraid to just look like an idiot sometimes, you know?
Yeah, exactly. And you have to try different things. People on the outside will never have the same view of your business as you have in your head. So it's almost impossible to put yourself in their shoes. The only way you can really find out is testing. No one will ever be so interested and so understanding of what you do than you. You have to recognize that. And for us, we're still not there. We've simplified that thing, our messaging to some degree, but just a few years ago, our website was typically the website of a company that's figuring out what it is. You can tell sometimes it's very wordy, very lots of
like ours.
Ours is like and that's completely normal. I think that means that you are actually figuring out yourself what exactly are we about, what exactly this is why actually I rarely read pitch decks. I always go on your websites, and I find that a lot more interesting than reading your I rarely read pitch decks. Tell you very little about a company. You might have very different. You have to have your pitch deck.
You have to do everything. You just have to play the game.
Yeah, exactly. But
everyone's different. Like that's your preference, but you find others that complete opposite. Yeah. They live off them. So
yes, exactly. No. I'm not saying that you should pick a pitch deck. You should have one. I personally won't read it because it tells me nothing about exactly what stage you're at. What's the story? Usually the website actually does that a little bit more.
Well, not ours.
Obviously did this, but just actually not necessarily what you said, but how you say it, and the way if the website is very wordy, that's typically a sign that you're in that fit. But that's not a negative, by the way. That means that you're very intentional about how you're developing the story and how you're refining your proposition. But it means that you are at that stage, which is quite interesting in itself.
It's the iterative stage. Yeah, there's a lot to figure out. Yeah.
Whereas I find that pitch decks are more or less the same. Everyone's kind of following the same structure. There's so much advice out there that's actually quite, standardized. So I think
the problem I have with pitch decks is it actually, because I did graphic design for a very long time and illustration, and the problem I have with pitch decks is it actually relies far more on graphic design and illustrative principles in order to get its messaging across effectively from a psychological perspective than it does actually the content of it.
Exactly.
And that isn't acknowledged enough, really. Is actually sometimes it's the best designed pitch decks that get the message across, and that's isn't
exactly
the point.
What I always tell. That's exactly what I always tell my team. The pitch deck always tells me how good you are at designing
pitch decks.
Your pitch decks. Whereas we have a very dry, sturdy questionnaire that we ask every fund. Whether you're a life science company or everyone's sitting the same questionnaire, and it's just tell us your story. Exactly. How did you guys come together? Why? How do you take decisions? Who's deciding? Who's the boss? Who's it's very concrete decisions. What's your what are your circumstances? If the company can't pay your salary, what's how do you manage that? It's really kind of personal questions that tell me so much more about where you are in your life, how why you've decided to build this company, what's the dynamic between the founders. Exactly, instead of having a traction page with a bunch of logos, exactly what have you done? What conversations that you had with customers, and it's just so much more interesting to read that than pitch deck will tell me nothing. A pitch deck is just, it's usually a bit bullshit, right? You're going to put as many logos as you can, exaggerate the numbers, Trust me, you're talking to people who know what a startup looks like. We don't expect you to have, but I'm quite interested to know how you've spent your time. What's the time of the company? What have you done? How have you spent your time? How have you spent, the bit of money that you maybe have invested in the company? This is so much more interesting. And then you can't really fit that into a pitch deck. But I'm quite surprised to what extent sometimes investors rely on pitch decks. I would put that on the same level as almost a business card. It's just like, hey, this is what we do, and I've got a general idea of what you do. Certainly wouldn't be able to take any view on the company based on pitch deck.
Yeah, absolutely. Yeah. Well, look, I just realized we went over the halfway slot because we were enjoying the conversation too much. But so that we'll have to end part one. But in part two, there's a ton I want to ask you about SFC in a little more, in a little bit more detail. I'm gonna be as invasive as possible, and you're going to have to tell me if I go too far about how you operate kind of day to day and how you sort of make your strategic thinking, which we were just touching on really, and about how you were saying about your perception of pitch decks and so on. But we'll do that in part two. So for those listening and watching, thanks for joining us. For us, we're just going to have a quick break and then we're going to record. But for you guys listening and watching, you're going to have to come back in a couple of days. So make sure you're subscribed and all that sort of nonsense. So share your thoughts in the comments and etc. So that's end of part one. See you in a couple of days for part two.
Thanks, Brett.
Thank you for listening and or watching. Subscribe with notifications turned on to get notified when part two comes out. While you wait, please join in the conversation in the comments below.